All right,
Right.
Robert.
Yes, sir.
Special 100th centennial episode of Real Estate Chat. And Robert, you know why this is a milestone episode?
Beyond the three digits, you mean?
Beyond the three digits, in fact, multiple digits, because we have a special guest who's joined us on this 100th episode
Fantastic.
that is going to tell us how to turn $550,000 into $2.5 million. Robert, do you know how to do that?
I'm going to defer to the great Ron Hoth.
On
Thanks.
this episode of Real Estate Chat with
Chandra Perez.
Ron Hoth.
Robert Eid and Robert Eid. There we
There you
are.
go. We pulled that off pretty well, guys.
Not bad for
We're going
faking
to
it
be
for the first time. Yeah.
First time.
not bad. We're going to be talking about why your time in real estate is better than timing real estate. And just like our loyal Real Estate Chat viewers who have watched this now through 100 episodes, the longer you spend your time, not only on Real Estate Chat, but on real estate, the more it's going to make sense, dollars and cents, in fact. So, Ron, welcome to the show. Ron, for those of you who have
Thank you.
watched every single episode of Real Estate Chat, you're welcome. We've quoted and we've shown Ron's charts on several of our episodes, in addition to Robert's analysis. So, Ron, you've guest starred here, whether you knew it or not. But Ron has been watching our episodes, and now he's on it.
I heard my name mentioned a couple of times, so I want to
There
make
you
sure
go.
it wasn't being used in vain.
Well, hey, only good stuff. So, Ron, you're going to talk to us today about a story about your client who, over the years, based on their initial purchase of roughly $500,000, and we're going to find out how long this took, but today's property worth $2.5 million. Ron, why don't you give us a bit of a background of yourself, your experience in real estate, and then take us through this journey of your clients who turned $515,000 into $2.5 million.
Well, I got my license in 1980, actually. Moved to Toronto in 1982. Saw actually a real estate boom then. Interest rates, that's when interest rates are going to 20 and 21%. Also saw, and in my charts, you can see what happened there. And then just started working, and there they are. So yeah, right back 1980, you can see the prices shot up. If you zoom in, you can see that it's pretty similar to how it looks, the big picture looks today. But 1980, and just started selling real estate, and it was I guess a recession of sorts. The market really took off. We had a brief blip in 87 where it dropped back down. They thought the boom was over, but then it continued after that to plateau in about 1990. That's when these particular clients who I'm talking about here, who should remain nameless, listed their house with me, and we sold it for a good price in a fairly few days, a bungalow for $260,000. Copies of the listings here if anybody wants to see them. I did keep records. And they bought off market for $515,000. The listings were a little bit scarce in about it was April, May. They were closing their sale in May, end of May, 1991, I think it was. Yeah, looking here, and bought the house they live in still. April, end of April, early May. They were sort of running out of time, so I had to pay a little bit more than the original asking price. It was on the market before that expired, and we made them an offer. They took it. They bought it for $515,000, and then almost immediately the market started to drop. It had plateaued in 90, 91, started to drop, and right through till about 96. As soon as it started to drop, I panicked myself because I was a bit unfamiliar with all this, relatively new in the business. They decided not to sell. They figured they would just stay. They seemed to know real estate was a long-term investment. So It dropped considerably from 515, I'm guessing 325 to 350. And then the market started to recover and it's taken off. Kept going up. They paid their mortgage off. They put an addition on the house. They continued to live there, enjoy it. Bought themselves a cottage, which they also still have, and the price continued to go up. Long term, we have seasonal ups and downs, as you can see from the charts. And their house, mortgage free, is easily worth and at $2.5 million. I found some comparables which would give us a guideline as to what it would be worth today, even after it's declined from the recent peak that we had in 2022. So $2.5 million, and that's all tax-free capital gain, and they don't have to worry if they need money, they can borrow it. They don't actually; they're still working. But
so Ron, you've been licensed for Robert since the 70s, Ron since the 80s. So you've seen this market, and I'm going to let Robert answer this question because right now we have real estate chat viewers who have subscribed and clicked like. Hopefully, at the end of this episode, you like our 100th episode. And they're thinking right now that, look, prices have gone down from peak, similar to what we saw or what Ron just illustrated on his charts and his real life example with his client. If I buy now and I'm looking at, so from the late 80s, 90s up till now is what, 90 to 2000, 20, 30 plus years, if I'm calculating it correctly. 30 years from now.
33 years, I guess.
30 something years from now. So 2060. So Robert, I'm going to let you answer this one. 2060. If I buy something today for $1 million, am I going to see the same growth that Ron's client has seen from 550K to 2.5 mil? And will my $1 million house be worth $3 to $4 million 30 years from now?
Adjusting for inflation, yes.
I didn't factor inflation into any of my graphs, but yeah, that's a factor. But
so it's almost a guarantee.
Hypothetical about 40 years in the future. So I'm coaching that answer by saying that nominally, who knows, and counting in inflation, yes, for sure.
So wouldn't it be almost, again, I'm going to oversimplify it. Isn't it a no-brainer that everybody should be buying real estate then?
They should prepare to buy, and they should prepare to find the very best product they possibly can find that suits where they need and want to live for the next 20 years. And if they do that, then they'll have a story very much like Ron's clients did, who in early 90 bought in the cricket club, and like, you can't beat that. And guess what? It paid off.
They paid their mortgage off. Every payment they made was an incremental payment back into their pocket in the decreased principal amount owing. Sure. And the interest rates were quite a bit higher then. They came down, so their payments came down. And I don't know if they paid it off early. We didn't chat about that, but they could well have, and invested money elsewhere. And they've done very well.
Is there a risk involved here? Because in Ron, and again, your client's example, they saw the market dip and they didn't panic. Well, maybe they did panic. You panicked, but they didn't sell it. They held on. They held on. And so are we going to see something similar now where somebody who bought peak February 2022 or spring 2023 have seen some of their prices, or if not, like if they bought at the extreme peak, they've seen those prices erode? Is it really just a game of holding on and making sure, first of all, that you made the right decision when you did buy and you didn't overstretch yourself, you bought within your budget? Is real estate literally as simple as buy and hold, and it's just going to appreciate and there's no secrets to it? What is the risk of somebody getting into the market today?
It was a number of years before they would have gotten their money back out of that property. It dipped. Prices went down from 1991 to about 96, and then started to rise. And I'd have to look at the numbers just to see where they equalized. But if they had to buy and sell during that time, if they decided to move, everything else would have been proportionally lower too. So it's not as though they would have lost a lot in real numbers of dollars. Yes, they would have been less, but their percentage ownership would have been comparable. So they sold at a lower price, they would have bought at a lower price. So I think that all equals out in the end. But the fact that
there's a buying. buying
Yeah.
and selling in the same market pretty much. And so,
Yes.
we've talked about on our show, we've talked about speculation, and you all know how Robert and I think about speculation, and Ron, I'm sure you'll agree with us as well. But let's take a hypothetical again. So the $2.5 million, if I had that fully paid off, there's no mortgage. Theoretically, I could start borrowing against this
Oh, yeah.
equity and buy two, three, multiple condos. I could park some money in pre-construction condos. I could pick up some assignments. I can buy maybe another detached home. Is that something that's advisable? I mean, obviously, speculation is speculation investing. We got to make a distinction between the two. Should somebody with the resources watching this right now and has that kind of money available or equity available, should they go out and put that equity at risk?
Yeah, I think just what they've done just proves that it's a long-term investment rather than a short-term speculation. They're gambling if they try it short-term and time the market, because we don't know for sure what's going to happen within the next few months or even the next few years. But they buy it and hold it. And if you buy a rental property, you've got people paying your mortgage for you. Your equity is bound to grow. You're going to decrease the amount of your principal owing, and sooner or later these will go up. Even if it stays the same price and your mortgage gets paid off, you're still ahead. But
Robert, is that something you would advise to do?
Well, you have to look at, are we at the peak of the market price? Are we at the peak of the market interest rates? And if we are, and there's an inverse relationship between interest rates and price, what happens? Rates go down. So you can't lose on both ends. You cannot. And as we've said before, you've got to live somewhere. You cannot live in a mutual fund. And as Ron Hoth has on the tagline on the bottom of his email, it's better to, instead of waiting to buy real estate and wait.
yes, I like that. And
Now
that's
it's going to be
basically what it is.
now, of course, some viewers of this who are very skeptical about real estate market, and who knows, maybe perpetually renting property, because you got to live somewhere, right? As Robert just said, you've got to live somewhere. Don't listen to the hype of real estate salespeople, real estate brokers, real estate professionals, but just use common sense. And again, it sounds salesy coming from real estate agents to tell you, hey, go and buy property. But you've got to look at real life examples of this. And we repeat it so many times. You've got to look at what's right for you. Now, we talk about different types of real estate you can buy today. You can buy different investment properties. Robert and I have covered pre-construction condos. We talked about assignments as well. Gentlemen, where does the opportunity lie in today's market? Now, of course, if we're talking to, as Robert has pointed out, many different segments of the market before, if we're talking about different segments of the market, different scenarios and different requirements for each of these segments require a different course of action. But is it safe to say basically that, today, as when we're filming this, October 24, tomorrow or October 25, depending on when you're watching this, the interest rate announcements probably been announced. The interest rates, in as much as they also affect, obviously they affect mortgage interest and payments and affordability, but more importantly, they affect consumer confidence. Gentlemen, we had a point where buyers were praying for listings. They were praying for inventory. They were yearning for availability of houses and condos to look at so that they wouldn't be caught in multiple offers and bidding wars. That time has come. Why has the general public shied away from entering the real estate market, where in fact, when you look at the late 80s, 90s market, when these patterns repeat at different scales, mind you, there's still going to be sales, there's still buyers out there, but where did the general population of buyers go?
Well, people jump on the bandwagon all at the same time, and they jump off the bandwagon all at the same time. And they watch all kinds of things that aren't connected. They look at what's happening in the stock market, especially the news about the stock market. They watch what's happening in the bond market, especially what's on the news, which, if you ever want to watch a shill, watch the news about the business cycle. Watch the news about the stock market, because that's the business they're in. What we're selling to you is simply this, that if it's a long haul, the people who are dissenters right now for real estate are short haulers. They think they can do something better in the next 2 or 3 years. and maybe they can. But where do they live? Where do they live in the meantime? And where are they going to live in 25 years? They haven't thought of that. So it's just a point of view. It's a perspective, and it's a, do you have 3 kids or not? Do you want to have a backyard or not? Do you want a place for your car or not? Do you want somewhere to be an automatic savings plan that Ron was talking about 3 times? The amortization retires the loan. What seemed like an awful lot of money, $300,000 mortgage in 1990. It's a pittance now.
Down payment now sometimes.
Yeah.
So there you have it. It can't get any simpler than that. And I mean, we try to make this show as exciting and entertaining as possible, but what's exciting and entertaining is the longer you're in real estate, the more your equity is paid down. If it's your principal residence, you're paying down your own mortgage, you're building up equity. If you bought an investment property, you have somebody else doing that for you. Now, mind you, the dynamics change. And with today's prices, obviously, you've got to look at how much down payment you have to put down, what's the cash flow like, and you know, what's the anticipated appreciation, right? But it doesn't get any more exciting than that, right, gentlemen? Like, buy and hold real estate. And all of these cliches about, you know, they're not building any more real estate and, you know, just don't wait to buy and wait.
Well, one other
Just
thing,
common
though, that's
sense.
happened right now, right under our noses, is you buy in the path of change. You look for what's going to be differently zoned, differently in thought of, different density in 2-3 years. And right now, we've heard from the provincial and the city governments that they are going to change the rules on Main Street real estate. They're going to allow density that you would never have imagined 5 years ago. And so this is the time, if you are looking to deploy some capital, you've sold off a couple of condos, or maybe the building didn't complete, and so now you're sitting on $157,000. You want to buy something. Maybe this is the time to buy a little place on a main street or on a corner somewhere where the zoning's going to change, and you're going to make money on appreciation from just the increase in density that will be available to that property because the atmosphere around it, the zoning plans around it changed, and now you can put 4-story building on that place.
So don't just buy blindly. You've got to be strategic as well. We're not telling you to just, I mean, yeah, I was oversimplifying it earlier. Go out and buy real estate, yes, but you've got to look at the strategic way of doing that. You've got to look at the opportunities, where they present themselves, and also where you're familiar with, because I find that everybody has a different lens in terms of how they see the world. And based on that, you may favor one type of properties versus another type, or one area, or one city, or one town versus other ones. So if you're not confident about the decision you make, you've got to do a bit more research and spend a bit of time. Don't be hasty about making your decision. Any final words, Ron, Robert?
Yeah, I always think, and back then, even when the prices were declining, I thought it's a market full of opportunity for people that have some money and wanted to get out and invest and buy something to hold long term. It's always dangerous to try and time the market seasonally or even in the short term. Buy it, hold it, rent it. Interest rates are likely to come down, although we don't know when. And immigration is high, so you'll always be able to find, or I think pretty reasonably be able to find tenants for something that you buy. Buy it, hold it, learn about it. You'd have to learn to manage it properly. There's opportunity out there, lots of opportunities.
Simple as that. Robert, final words.
Ronnie, well, John, you said it a while ago that it's supply and demand and consumer confidence, that people jump on the bandwagon when they see that it's a sure thing. And a few people jump in early when they see that, everybody's selling, now it's the time to buy, and vice versa. So just be patient, be diligent. And what you also said earlier, John, is that a few months ago, people were dying for listings. There was nothing to buy, and they overbid the asking price gladly because they were just glad to get something. And now every single property, the seller is quite willing to talk turkey on price, talk turkey on financing, talk turkey on inclusions, on date. With every single buyer, just give them like 3 weeks to get sick and tired of nothing happening, and now you can talk to them. Now you can make a deal. Now you can be a buyer. Now you need some representation to show you the way.
All right, so you're watching it here first, 100th episode, and in episode 200 we'll talk about it, and 300 we'll talk about it, and episode 1,000, if we reach there, we'll talk about it. Thank you for those of you who have watched and supported us. I know we're still a small crowd. I mean, growing crowd, albeit, but nonetheless, your loyalty, your support, your comments, good and bad. Like we love to hear everything. Have made this very rewarding for all of us. So I hope you all had as much fun as we all did, and make sure you tell your friends, family, and loved ones about it. On this episode of Real Estate Chat, thank you very much, Ron Hoth. Thank you, Robert Eid. And we are going to be signing off. Make sure you leave into the comments what you thought about this fantastic growth that Ron's clients have seen. Share with us your experiences. We'd love to hear what you think, Real Estate Chat viewers, in the comments.
And those people are just one example of many, many people that have done the same thing, just calmly bought and held and lived in it and enjoyed and paid their mortgages, etc. So
And
lots
that's what
of
it
opportunities
is.
for that.
There you go. Thanks for joining and watching this episode of Real Estate Chat. Take care and bye for now.
Thanks for
Thanks,
having me.
Ronnie. Thanks for dropping in.
My pleasure. Thank you. Bye.